Financial Survival Network, helping you to survive and thrive in the new economy. Get our complimentary newsletter at financialsurvivalnetwork.com. This is the Financial Survival Network.
We explore many approaches towards wealth building and wealth preservation on financialsurvivalnetwork.com. And one of the best systems I've come across is cycle investing, but not everybody is good at it. Person on the other line, David Gurwitz of Charles Nenner Research. They are the masters. So I thought you should hear from them what David thinks about gold and silver right now, as well as currencies, commodities. So I think it'll be worth your while to listen to this one. Hey, David, welcome back to financialsurvivalnetwork.com.
Thank you, Kerry. It's always a pleasure to chat with you.
Hey, likewise. So look at this gold cycle and the silver cycle. The cycles weren't really pointing that high up in the short run, and yet they seem to have done a breakout, haven't they?
Yeah, well, we covered this, and by the way, as you and I spoke, anyone listening should write to our site and mention where they heard it, and we'll put them on for free for a while so they can get an idea of what we do. But we mentioned this, charlesnenner.com, by the way. We've mentioned this for a while, especially on Sunday when Charles does most of the chart work, and he covers not just cycles, which only give you direction, which I'll explain in a second. I think I did it last time, but I can do it in 1 minute, and not just target, which is based on rocket science, but also he uses trend line analysis, he uses MACD, he uses oscillator, all the stuff that other people do. So he's trying to be Sherlock Holmes to figure out when they all lined up. So he wrote on Sunday, gold's trading above the trend line. As long as it stays there, we stay with the bullish scenario long term, which is 2100 and then 2500. And the reality is he also sees a slight potential, and he doesn't like to talk about it much, of it way more than that if they monetize gold. But for sure, 21 and 25, and when he took everyone out at 1900 several months ago, he saw this was going to be a downturn, and then it's kind of last 3 weeks it's been up, but he has his numbers. Obviously, Newmont, for instance, very long-term Newmont cycles, he wrote on Sunday, are up until 2014. So a lot of our big hedge funds and long-term family offices and sovereign wealth funds, that's the stuff they're really interested in. And they'll put on a long-term position with whatever the spins and turns are of that. And again, comparing the underlying gold and silver, obviously, and then the underlying stocks related to it. You know, he's always trying to compare the two. They don't always match up, obviously, for obvious reasons. But that's kind of the big picture. Gold is going to 21 and 2500, and silver should go back up to 49. Copper is down over 5 years, even though short-term it's up. So that says where the overall economy is, which he does not think will be good over the next 5 years, which is why he sees the stock market down and the bond market down.
Yeah, so when he says that the economy isn't going to be good, and this is strictly a cyclical call, right? It's not based on any kind of fundamental research or analysis.
Right. Tell you one thing, and you know, I've talked about this, we consider cycles to be fundamental. I mean, I could define what's fundamental analysis, obviously, you know, what people consider fundamental earnings and, you know, stuff like that. But because cycles seem to be so accurate across any data series, including economic indicators, such as unemployment, such as the VIX, such as non-farm payrolls, all the stuff that he's also predicted so well, we consider it fundamental. So that's why people always get surprised with the number that comes out, and we predict it. So I don't know what you know what I'm saying. I don't know how to what to say. We consider it very fundamental. Therefore, yes, cycles are down in stocks and bonds, not commodity stocks and bonds. By the way, I mean not commodity stocks. All the commodity are up. Both grains and gold and silver and crude and not gas are up for years. And the other part of the world, stocks and bonds are down, which will be very interesting to have stocks and bonds down, which people are not used to. And then the dollar, our dollar should fall apart in about 15 to 18 months, which is going to create a whole mess of things. And the euro will be the currency of choice then, which it is now, believe it or not. And he's been saying to people for a while who wanted to short it, don't short it, don't short it. And he's been right. So That's the big picture in a nutshell. I know you're very focused on the metals, correctly so.
Yeah, well,
But
metals and vis-a-vis currencies, you know?
Yeah. See, I think a lot of people care. We talk about Sunday night, we send out, we try and get it out by 6 p.m., which is when the Far East markets open. So that's when the world starts trading, right? Right after the football games, they start trading.
Right.
And you know, what gets traded most is currencies.
Mm-hmm.
And so it's the currency crosses, which people do not think about, that in our opinion is like major to think about. To really, just even those who are focused on gold, they should take a look at the euro yen, the Swiss yen. I mean, just to keep it on the screen doesn't take any hard work, and then start to see, because that says a lot of stuff. Everything nowadays is risk on, risk off. That's pretty much what it seems like. And you got to take your money after a short gain and get out. And that's also a thing that people's trading habits overall have been forced to be shorter term. It's been very hard for trend people to do anything. So much sideways. The yen, obviously, so much sideways that patience is very, very much in demand, but yet very difficult to have when so much seems to be happening. And then you get these explosions. You know, everything was down gold for months and months and months. Now all of a sudden, gold, gold, gold again. So how do you comfortably and psychologically remain balanced in the view? It's very hard.
Sure.
Without cycles. I mean, that's what we think.
Yeah. So the cycles give you a means of judging things relative to one another then.
Right. Well, again, it's a very good question. Charles doesn't ever say because this and that. He's as brilliant as he is, which he is. He always says, I'm not that smart that I can make an interpretation because stocks are doing this, that gold's going to go do that, or silver's going to do that, or rates are going to do that. He says, that I don't do. He says, I just tell you what I see purely scientifically in each data series, and then you can decide for yourself, because that's, once it's open to interpretation, everybody can claim bullish or bearish with the same data. You know, I've had people with the same research be out and be short. I see it all the time. You know exactly what I'm talking about.
Yeah, exactly. I know exactly. Everything's subject to interpretation. And one of your competitors, who will go nameless, in the past 3-4 years, where you guys have really racked up huge returns and done some major market calls, this one, who charges a fortune for the service to individuals, mainly applied it to stocks and has had 2/3 losers as opposed to 1/3 winners. And this is a famous person that runs this company. And to me, it's just shocking, because on that kind of record, how many subscribers can they have left?
Yeah, I know. Like, again, take the basic money management business, right? You have the advisors, you have the brokers, you have that, and then you have the shops, you know, the Wells Fargo and the Goldman and the you know, all these places. They have agendas, you know, and so a broker calling you is going to generally have the agenda of the firm he's with, and their job's to collect assets and get fees around them. I don't blame them; that's their job. We just sell research. We don't want money. We don't want to manage money. We don't want to broker it. So we think we're more honest that way. But also, if someone's just doing stocks, for instance, and they're trying to do it without cycles, like we have guys, for instance, who are long-only people, that takes a while for them to get comfortable with us because we're timers, and they're not. We always say, fine, if you believe in stocks, like Charles wrote today. Let me just read you, and I think you saw it, but I'll read today. He wrote a very interesting piece about, we mentioned that Alcoa is bottoming, and we mentioned on Sunday U.S. Steel is bottoming, right? And we also said BHP and India show the forming of a cycle low, and they can be bought. India can be bought by different ETFs. So Charles wrote, these symbols are for investors who really feel they have to own more stocks, because some people feel they want to, even though he doesn't necessarily recommend it. However, short term, we're looking for a cycle high in the S&P around September 24th, and the Nasdaq's weaker than the S&P and the Dow Jones. So you're going to have some things going up, but you're going to have a pretty strong down move in stocks pretty much over the next 5 years. Right. With its 40% up moves to drive people crazy. But So here you have some things that should go up also, obviously, but how do you pick that? If you're just a stock person, I don't know, does this person you're talking about, was he short also, or was it all long calls?
There were shorts, there were longs, and it seemed to be wrong on everything, and I won't name names because...
No, I don't want to know.
But it was just remarkable because they rely on some of the base research that you guys do that we had talked about before that I won't mention, but your Bible, they have the same Bible, and yet they're going to hell and you guys are going to heaven.
Mm-hmm.
It's bizarre that they could rely on the same basic cycle research, the fundamental research, and get everything wrong. So now here's another market that obviously is subject to cycles, and that's real estate. What do we have any research from your company on that?
You're going to laugh when I tell you this. Real estate's going to go down, but you should buy it.
And the reason is because you can use debt, and the debt is going to become worth less and less, so you leverage.
Although that's true, but that's not the reason. It's like why to buy Picassos and why to buy diamonds. You're getting money out of the financial system. A lot of people buy gold. Right? So you take $10 million and you get a chance to give money to a charity or get a chance to buy a building for a charity.
Yeah.
Better off to do B. Because at least at the end, you'd say you're taking $1 million, you're giving 10%. And you get 10. At least you own the building. Something happens, whatever, at least you own the building. You have some ownership of it, because if it's going to be as bad as some people think, real estate's real estate.
So I'm going to shoot something by you then. Multifamily housing. Okay. We're talking like what they used to call garden apartments. I don't know what they call them now, but people got to live someplace. They're losing their homes still in droves. We know that foreclosure rates are way up. Is multifamily a good play to take money out of the system as well as to lever up and to play inflation as well?
The answer is it's going to go down also, but according to the cycles, I mean, we do have real estate cycles. There's Cohn and Steers is some data that Charles used to write a lot more about this. He really hasn't for a while, so I cannot actually say I'm 100% current on what he thinks, but I have discussed with him in several big sovereign wealth funds and hedge funds and family offices. We talk about this all the time, that, there's going to be a downward move in price in a lot of things other than assets, hard assets, because the money system and the overall economy, if you have a Dow at 5,000, how could real estate, buy a multifamily for $5 million, how could it go to $8 million? If everything else is going down, then you have hedge funds having less money to be pouring in because they're now buying up shopping centers. I know a friend of mine's big in the shopping center, one of our clients, and he's now competing with hedge funds. But it's still not a bad thing to be in, considering what's going to happen to other things.
Yeah, so the future of money, of fiat currency, is looking bleak, is what you're saying, and that goes for everywhere,
bleak. Right. That's potentially.
We're talking everywhere in the world, though, right?
Right. Yeah, well, let's put all the pieces together, if you don't mind. Let's take sunspots. We're already saying Charles is crazy. Some people go, let's talk about everything.
Oh, I totally believe it. Arch Crawford is big on that, and
he's a smart guy.
There's a lot of
sunspots are topping, right? So you have that. So
a lot of, and that's a food cycle too that we're talking about.
That's also separate. You got that's one thing, people will literally feel depressed because there'll be less exuberance. Number one. Number two, you have grain prices. They're going to be down a little bit more going for several months, but they're going to be up for a while. Live cattle is an area, feeder cattle. We cover all that for a lot of cattle companies and investors. That's going to be up for years. You have increasing food prices. The water issues obviously are not going away. You have a stock market that pretty much is topping and down for years. You have a bond market that's just going to go down there for rates are up. So borrowing costs, look how much there is in debt now. Imagine who's going to be making all the loans, especially when all these funds keep going down on the overall core values that they'll have in stocks. And then you have currency big moves coming. So, fiat money, as we've known it for so many years, that's the reason he says gold could go way, way higher than 2,500 if it gets to that point. He doesn't see it, but he says he definitely sees it as a possibility. All of us listening, you get some very bright people listening, they all can think about this. I'm not the only one. You're not the only one.
Sure.
We haven't really seen it in our lifetime, so it's hard to imagine.
Thank God we haven't.
Look at interest rates. Like I said last time, in our lifetime, they've been down the last 30 years, and in the prior 30, they went up.
Hey.
And in 1950, they were 3%. I think I mentioned that on the show.
3% in the early 60s. Then they went to 4%.
The government, 1950, TV, the first advertisers of the U.S. government selling 3% bonds. 1920, they were high. 1890, low. Civil War, they were high. And 1830, low. 1800, high. So you have this cycle going back all this time. Not going to really change.
And I just have to tell you a really funny story because I'm a contrarian by nature. And it probably comes from like just rebelling against my parents. If they wanted me to go here, then I wanted to go there. So I'm in college. I took up space at Pace University. That's my alma mater.
And what year did you graduate?
81, I guess.
Was Piccarello the coach then?
Don't remember. Remember. It's a long time ago. So anyways, at the time, interest rates were close to 20%. And, the professor says, well, who out there believes that that interest rates will go back down to 5%? And, I raised my hand. And everyone else, there was like 50 people in the room said, shaking their heads. And everyone looked at me like I was insane. But just like they went up to 20, they could go back down to 5 or less. And I guess I was a cycle person and I didn't even know it. It's kind of funny because, like here it is much later and, look at the rates. So it's just interesting.
Right. No, I agree. I mean, so you have all these listeners thinking gold, gold, gold. And for a long time, gold was nothing. Right? It went crazy years ago, then came back down, sat for years. Now it's coming up. It should continue. And that's kind of Charles's feeling. It should continue, and 21's the first shot, and the mid-21s, and then 25 after, within a year. Actually, that I don't know. I mean, we've talked about a year and a half that you get to those levels.
Yeah. And silver is going to follow it? Is that what we're looking at?
Yeah.
Is silver...
Not as strong as gold, but
So far this month, it's I just felt that the market was changing. I don't know anything about technical analysis. Cycles I do definitely try to observe, but I felt in August that the nature of the trading, as reflected by the price action, was definitely shifting. And not to say, I called this, but not from any, prideful thing like, hey, I called this upturn. I could care less. It's only that my observation was it was changing. And to me, the cycle definitely changed. And it seemed like the intervention and the manipulation, which is built into that cycle, changed as well. And whether it means that the insiders, the wealthy hedge fund people and the elites are buying the metals with two hands, that could very well be the case. Or it could be seasonal going in with the cycle, because we know that after the summer, the Indian wedding season happens every year. And then we have China kicking up. And then we have the cycle, as you were referring to, with the currency cycle, which the two are kind of contra to one another. And, you factor in all those, but it's just really interesting to see that, it happened. And then the gold to silver ratio also declining as a result too. So we're in for some interesting times, I guess, is the upshot of it all, right?
Yeah. Another thing to keep about with gold, just to keep in mind, if you look at quarterly, right? Mm-hmm. I think it was 2008, gold was around 680, something like that.
Yeah. 720
last
it dropped.
quarter,
Yeah.
We kind of got, if you look at quarterlies and what percentage down it's been from the past, one of the non-cycle things, but nonetheless people will look at. Keep buying gold, even if like the traders in Chicago that I deal with, which are really the best traders in the world.
Absolutely.
They're feeling like buy the hard breaks, it's called.
Mm-hmm.
So silver, according to this, looks like a bargain,
Right.
because of, according to that analysis of look back quarterly, going back all these years and what percent retrace, and it never went below, I think 76% of a certain, I think it's called RSI. And
right, relative strength.
That's just a pure technical thing, but gold keeps holding around in the 30s, 33s, and last quarter's high was 33. So, I look at this stuff, obviously, but, what Charles does, because he looks at so many things and he provides the overall guidance on everything, people sometimes can stay in when they wouldn't, because they see it's just going to go through a dip and stay. I've several people with millions of dollars of gold, and the question they ask is, what should I do in the short term? And I said, if you really believe in the whole thing that it's going up, just sit back and, it's not, right now is a better time to stay in and be in than 6 months ago.
Right.
Because that was a time, he said, we're going to get out. It was 1900. He said, get out. And that was hard for people after years of an increase in gold. That was very difficult.
Yeah, well, my feeling was I felt that there probably was going to be a correction. I didn't expect it to last for a year. Totally didn't, because it was uncharacteristic for the bull market that's taken place for the past 11 years that it would be down for 12 months. Just didn't happen. But then again, I'm always remembered what Benjamin Graham said, which is that the tree doesn't grow to the sky. Right. So, but then I said, look, I'm in this for, I started buying in the 8s. And, I'm still convinced about the long-term trend and the long-term cycle. So if I sell it, then I certainly don't want to sell the physical, but then I'm going to have to go find something else to buy that I'll probably lose money on, because that's just the way I am as a trader. I'll just ride this dip out because I'm still double where I was when I started, and triple or quadruple with silver. So, so I could afford to take the longer term view, but somebody that bought gold at 1900 wants to slash their wrists when they saw where it went.
I know. I'll tell you another thing, just to think, people like Nat Gas, Charles called when it was $6, said it was supposed to go to $1.70. Everybody laughed. It got very close. So now we're not long yet, because the short-term stuff, long-term, it's going to $5. So if you're sitting there with some long-term money and you agree that the system works and other things, I'm going to trust them, you can go long-term Nat Gas. It was really interesting how the world works. Here's an example of what I consider fundamental aspect of cycles. He said $6, it's going to $1.70. Everybody laughed. Gets down to $1.70. When it got to $3, the Canadian banks, who had made a lot of loans to the nat gas companies,
they're dying,
said to them, guys, how are you going to pay this loan back? You better start selling that stuff. And so a lot of sales went out about $3, which forced it down to $2.80, $2.75.
And a lot of companies, merging and getting out of it too.
Right.
Yeah.
So that's forced it down. So in that case, cycles were fundamental, the predictor. And then you had banking issues always related to it, but no one saw it like that because
you can't predict the future, but the cycle already knows the future.
Well, that's what we think you can predict the future based on the past patterns. That's pretty much, there's a word everybody now knows called chutzpah, right? That's the chutzpah Charles had.
I think we call it balls, but on this show.
But it for a long time. He was at Goldman 15 years, so when they were more of a hedge fund, I guess they're not the same anymore.
Before they became a vampire squid, I guess.
Yeah. But, so that's the story. So I mean, but I say everyone listening, CharlesNenner.com, write in, say you heard me, and we'll put you on the list. You can watch for a little bit, and it would be our honor. And I enjoy always catching up with you.
Yeah, you too. And I start my days off when the update comes, looking at it and analyzing, seeing where it is. I totally agree with you on nat gas. We don't that's the future, is that the demand is going to be there, and we don't understand how that demand will materialize right at this moment, because we're limited by our imagination, and truth, as Mark Twain said, is stranger than fiction, because fiction is limited by your imagination, but truth isn't limited by anything. So the demand, if you build energy, if you create energy, the demand will materialize to get it, because we don't have enough. And that's what's fascinating.
When it was $6, when it was a little bit more, $7, they kept finding that gas like everywhere.
Mm-hmm.
Like all of Europe was in that gas field. And, the fracking, no problem, no legal problem.
Yeah.
As it got down to the target, I kept watching the news, because the cycles are the newspaper.
The cycles create the news.
And the news follows it.
Yeah.
And then all of a sudden the laws got stricter on fracking, and all of a sudden you had environmental challenges. And so it seemed to be setting up for a bomb, and that's kind of what I see. And I have a bunch of clients in the business that say, they're heavily invested in it because they feel it's going to go back up to $5-6, and that's what the cycles show in our target algorithms, just like gold, just like silver.
I
Oil
totally believe you there.
Crude is bottoming in the end of the year, and then up for a while. He predicted that there's going to be a war in Israel, and that after that, the Israeli market is up for 6 years, which means the result will be a positive result for Israel.
And that's why I love the cycles, because, when they're right, and you're not always right, but usually you're not too far wrong when they happen either. But when they come to pass, and then you see it, it's like, my friend is an expert at calling football. He wins 80% of his bets. He's the only guy I've ever seen who can do this. And, we call him MR, Mojo for short. And Mojo, he can just pick it. And, like, we're watching a Super Bowl game, and he's got the over, and, we're in the last 7 minutes, and they're like 14 points off, and he's going to lose a lot of money. And he turns to his friend, Jeff, and he says, Jeff, I don't know what's going to happen here. I don't know how it's going to happen, but we are going to win this bet. And right then there's an interception, touchdown. Then they get the ball, another touchdown and a field goal. 17 more points pop up on the board. He wins the over bet with just this blind, because he's a contrarian bettor, and everybody was betting this game under. And, it was 3 years ago when the Giants won. I think it was 3 years ago. And, crazy stuff happening in these games. And, it just conforms to the cycle, I guess, is my point here. Anyway, David, so it's Charles Nenner, NENNER.com. I think it's must, since I started getting it, it's really helped my clarity and perception of the markets, even when I don't agree, which I don't always, but it's really been a plus. And it's always a plus having you on the show, David. And hopefully we'll put this webinar together, because I'd like people to really understand how these cycles work, because it's very important.
I agree. I look forward to it. I thank you. And I have my next call in about a minute.
All right. So hey, we didn't mean to keep you for so long.
So punctual.
We didn't mean to keep you for so long, but we're putting up your China piano solo, because I really like that song.
Okay, that's
all right.
Then I'll talk another 20 minutes. No, I'm not kidding. I really have to.
All right. Take your call. We will talk to you in a couple of weeks. You be well.
I look forward to it. Bye-bye.
Bye.